Hi everybody, Marco Carbajo here from businesscreditblogger.com. Today's video we're going to talk about how to get unsecured real estate lines of credit. And the purpose of the video, what you're going to learn in today's video is we're going to talk about two different types of unsecured real estate lines of credit you can use for investing in real estate. So if you're looking to buy and hold, or you're looking to do rehabs, fix and flips, then this is a video you're going to learn how to get access to two different types of unsecured lines of credit that you can use to get cash out of, as well as use for purchasing. And at the end of this video, we're going to show you how to actually apply for these types of lines of credit and how you can get these lines of credit set up to you in less than 14 to 20 days from now. So let's get started with the video. Now, first and foremost, I want you to understand that when we're talking about, there's so many different types of funding sources. There's hard money out there. There's HELOCs, equity lines of credit, etc. There's private money, etc. But what we're going to talk about today is literally unsecured lines of credit. So this gives you the opportunity as a real estate investor. You don't have to pledge any collateral. You don't have to put up any of your property, especially if you're brand new into real estate investing and you're looking to start investing. Obviously, you don't have any properties yet you can use for getting a line of credit, equity line of credit. So we're going to talk about unsecured lines of credit. So first and foremost, what is a line of credit? A line of credit is a revolving credit product. It's issued by a bank that allows you to draw funds up to the entire credit limit issued, and you can borrow the money against the line whenever you need it. You can repay the balance in full or pay a minimum monthly payment. And so you can borrow against these types of lines of credit over and over again. That's the best thing. Whereas if you get a loan, you'll get a lump sum of money. You use it, you have no more funds available, you have to get another loan. So a line of credit is a great funding product you want to have in your arsenal as a real estate investor. Now you can access this line of credit through a variety of methods, and it really depends on the types of lines of credit you get set up. Now the two types we're going to talk about today in this video, you can get both of them. You don't want to limit yourself to one type of funding source as a real estate investor. So you might be having access to hard money right now. You might have access to your own private funds. You might also have some maybe an equity line of credit. But we're going to show you how to add two more sources of funding vehicles for real estate investing. And the more vehicles you have access to, the more flexibility you have as a real estate investor. And that's what's really important, is you want to have access to multiple sources of cash and credit as a real estate investor. Obviously, there's money you want to get right away. You want access to cash in less than 24 hours. Then this particular video you're going to enjoy, because we're going to show you how to get lump sums of cash right away from your lines of credit. Now, the two types of lines of credit we're talking about is the traditional bank line of credit and non-traditional. Now, you'll see in the bottom of the screen it says businesscreditbuilders.org/business-lines-of-credit. This is where you're going to actually apply for one or both of these lines of credit. So let's talk about the two types of unsecured real estate lines of credit. The first one is bank lines of credit. These are actual lines of credit issued to you by the bank, completely unsecured. And these aren't credit cards, they're actual lines of credit where you have access checks to draw on your line of credit. So if you need, let's say you have a $50,000 line of credit at the bank and you need $20,000 in cash for a down payment, you simply stroke a check and you could draw up to 100% of the credit limit on your line of credit at the bank. But what I want to talk about here real quick is this particular bank lines of credit in this video are individual bank lines of credit, not business bank lines of credit, because there's a big difference. As a real estate company, if you're a real estate investor and you have a real estate business setup, let's say it's an LLC or a corporation, banks will not issue bank lines of credit to real estate companies that's unsecured, because it's a high risk industry. So the types of lines of credit you get in the business as a real estate company, that's where you have to secure it with collateral, which is equity and properties that your business may own, etc. So to get unsecured bank lines of credit as a real estate investor, you have to go with individual bank lines of credit. These are lines of credit that are issued to you as an individual, not a business. And these are unsecured. So you'll see you have flexibility to draw lump sums of cash. You can use it for down payments, paying contractors, rehab and renovation costs, etc. The second type of line of credit, which is really exciting, are revolving lines of credit, and they're in the form of business credit cards. So if you're a real estate business, you have an LLC or corporation, you can get up to 4 to 5 business credit cards issued in your LLC's name as a real estate company, and this is through our program. And this gives it's completely unsecured, and it gives you the ability to have flexibility. You could use it to purchase products and services for doing rehabs or materials, etc. You can draw cash on your business credit cards. You can draw up to a certain amount and avoid the high transfer balance. One of the strategies we're talking about is cash advance fees. When you use credit cards and you pull cash out of them, you have to worry about those high interest rates, but there's a way around that. It's called the balance transfer strategy. So we're going to talk about that in a little bit. But these are the two main types of credit lines we're going to cover in this presentation. Now, what are the benefits for both of these types of lines of credit, and how do you qualify? We're going to talk about that next. Is you could draw on these lines of credit anytime you want. You can pay back the balance in full, or you can pay a minimum monthly payment on both. It's a much easier debt to service if you're a real estate investor. So let's say you're going to do a rehab property and it's going to take 90 to 120 days before you can actually fix it up and then sell it. You need to carry that balance on these lines of credit. Well, then you can make a minimum payment and carry that debt. You don't have to pay it in full within 30 days, which is great. And you get access to the cash and credit whenever you need it. So you have that peace of mind as a real estate investor. If a deal comes up and you need the money right away, you'll have access to this type of capital to do your deal. Now, another benefit of our programs is that we help you establish multiple banking relationships. Now, your line of credit, whether it's business credit cards or it's bank lines of credit, it's not with one bank. You'll have multiple banks that will issue you business credit cards and bank lines of credit. So this will give you multiple banking relationships, usually around 3 to 4 relationships per type of funding vehicle. So this gives you diversity. The banks will compete for your business. They'll give you potential for credit limit increases. At the same time, you want to have diversity in your banking relationships. You don't want to have just one bank that handles all your financing. Because let's say the bank at one time decides to reduce your limit, or they don't offer additional financial products that you need. You want to have that diversity. You want to have multiple banking relationships. No restrictions on how you use the money, and you get access to cash for down payments and get access to cash to pay contractors. And this gives you also the ability to finance your rehab and renovation costs on credit. So what will you get with each of the programs? Now, you can do a combination of both of these programs, or specifically apply for one program. Now, bank lines of credit, what we do is we set you up about 3 to 4 banks. They give you an actual line of credit that's issued to you as an individual. And the lines will go up to $200,000. Typically, each bank will go maximum up to $50,000, no more than that. So you're not going to get a $100,000 line of credit unsecured with one bank. Typically, it's $50,000 is the max they'll issue per bank. Now, your interest rates are going to be in the 7 to 12% range, which is a decent range. And your minimum monthly payments on any outstanding balances is 2.5 to 5%. Now, the other types of programs we have is business credit cards. And what we do is we set you up with about anywhere from 4 to 5 business credit cards. That's 4 to 5 card issuers. What's unique about the business credit cards is the fact that they come with 0% introductory APRs for a period of anywhere from 6 months to 15 months or more, depending on the bank. And it's issued in your company's name. And what's unique is the credit reporting. They only report to the business credit reporting agencies as far as credit goes. So this protects your personal credit. Yes, you're the guarantor on these lines because it's completely unsecured, but it helps you build up your business credit reports as a company, because any activity and payments will report only the company's business credit reports. This positions your business, your real estate company, for future credit limit increases. At the same time, in the future, when your company wants to apply for additional financial products, banks and lenders, suppliers, vendors, they can now check your company's credit report as opposed to always relying on your personal credit to determine how creditworthy you are as a company. Now, also you have the APR range will be anywhere from 9.9 to 19.9% on these business credit cards, and the minimum payments are 1 to 2%. So that's the two types of unsecured lines of credit you can use for real estate investing. Now, the most important thing you need to ask yourself is, what will this do for you if you have access to an additional $50,000 or $100,000 or $200,000 in credit and cash available to you? What will that be able to do for you as a real estate investor? How many deals did you miss because you didn't have access to the cash or credit? And that's what I always tell people who are going through funding is your return on investment. So if you had access to an additional $50,000 or $100,000, and you're able to do, let's say, 2 or 3 more deals a year, how much more in income is that going to generate for you? How much will this allow you to scale your business? What kind of returns can you expect from additional investments you do because you now have access to more money? How many more fix and flips can you profit from by having access to more capital and credit? And so these are the things you want to kind of, I would say, document down so you can look, because obviously when you go through funding, when you're getting access to lines of credit, obviously we charge you a fee to set up these lines of credit for you. So you want to make sure what's going to be your return on investment, how much cash flow you're going to generate. Let's say you buy and hold, you buy a property that's going to generate some positive cash flow. How much can that generate by if you have an additional $50,000, $100,000 available to you to buy some properties? Now, the requirements. What does it take to qualify for both of these or one of these types of lines of credit? On the bank and lines of credit side, these are individual bank lines of credit, completely unsecured. So what banks are looking for, because this is an individual bank line of credit, is they want to see how credit worthy you are. So you got to have good personal credit, 680 FICO scores. That you can get away with a 670 or higher, but you want a 680 on all 3 of your credit reports. Now the key though is your income. The income has to be verifiable. That's what's key for this type of product. So you have to be able to document your income. So if you're an investor but you also have a job, let's say you have W-2 income, you have pay stubs, that's excellent, because that's very easy to verify income. You just have W-2 statements and you have pay stubs. Let's say you're a real estate investor, you're self-employed, but you have some rental properties and you have rental income coming in. That's great. You could document that rental income through bank statements. So if your personal checking account shows rental payments coming in of, let's say, $2,000 or more a month, that's great. That's proof of income. So we can use that. You also can, if you have tax returns, you can provide tax returns if it shows your personal income is at least $2,000 or more a month. That's the minimum. Then that's great. But remember, you have to be able to verify income. That's the key. Now, as far as using these types of bank lines of credit, you can access it by phone, online, or access checks. What's unique about these types of lines of credit is you can draw up to 100% of the credit limit with nothing to worry about cash advance fees. You don't have to balance transfer anything. That's the beauty of having a traditional bank line of credit. Now, the second type of qualification is business credit cards. This is ideal as well if you can't verify income. Then you go what's called stated income. Business credit cards are really easy to qualify for if all you need is to have good, strong personal credit. You also have to have an LLC or a corporation set up if you want business credit cards. So you have to be able to provide your certificate of organization or your articles of incorporation, as well as have a 680 or higher FICO scores. Now, as far as your personal credit report, what are other things they look at? They also look at your utilization. Ideally, you want your revolving credit cards to be under 50%. You don't want to be maxed out on your credit cards. If you are, we can still pre-qualify you at no cost, but you may have to do some pay downs to qualify for the business credit cards. The other thing they look at is the size of your credit limits that you currently have on your personal credit cards. What I tell people is if whatever your highest credit limit is, let's say your highest credit limit is $20,000. You have a $20,000 American Express. Then typically you may be able to expect 4 to 5 times that amount in business credit cards pre-qualification. That's just a general rule of thumb. Okay, so the other thing is inquiries. You want to keep inquiries very low. So if you just have like a whole bunch of inquiries in the past 60 days, then most likely you're not going to qualify, because banks look at that as someone who's desperate need of money. They don't like to see a lot of activity like that. So we have a lot of people who try to get credit on their own. They try all these different types of funding, and then they get declined. Then they come to us, and we can't do anything because they have too many inquiries. So you want to keep those inquiries small. A great number is under 4 inquiries in the past 12 months. If you have 6 or 7, that's okay. As long as it's not within the past 90 or 120 days, you want to keep it really low. But remember, doing a pre-qualification up for us, it doesn't hurt. So let us do the pre-qual. It's free. It doesn't cost you anything. There's no obligation to find out if you qualify. Now, when you get these business credit cards, you can use them anywhere Visa or MasterCard are accepted, and you could draw cash on these business credit cards as well. So don't think you can't pull lump sums of cash off of credit cards. You can, but you want to utilize the balance transfer strategy. I did a video not too long ago on how to do how to get a 0% on cash advances. So may want to check out that video. It's really helpful. Now, as far as why real estate lines of credit, why would you want these types of funding vehicles, the two that we mentioned in this video, for your real estate investing? It'll help you start getting investing in real estate, access to cash for down payments and closing costs. And of course, you can. It just gives you diversity, gives you flexibility. So, because sometimes you may want to use hard money, sometimes you may want to use private money, sometimes you may use a business credit card to purchase some materials to do rehab. Sometimes you might want to draw on your line of credit at the bank for a large down payment. So, when you have those options set up for you in your arsenal, then you have all choices. So, the more choices you have, the more you can, invest more intelligently and utilize the fund. Like what I like to tell people is every funding vehicle that's out there has a purpose. So you want to make sure you leverage those funding vehicles that are available to you. You don't want to restrict yourself to just one type of funding vehicle. So let's just say you're a real estate investor, you have some money in the bank and you have hard money and that's all that you use. That's great, you could do that, but why would you limit yourself just to those two vehicles? You should have multiple access to multiple types of funding. You could pay finance rehab costs, pay contractors, pay off your balloon notes, purchase land, etc. Now, how do you pre-qualify for these? We went over the two types of unsecured real estate lines of credit, the benefits, how they work, what you'll get, how to qualify. So let's say you meet those requirements or you want to see if you pre-qualify. All you need to do is order a tri-merge credit report. That's what's great is we don't pull your credit to do a PreQual. Okay, so you're not going to get a hard inquiry. We allow you to supply us a tri-merge personal credit report, and our underwriters will do a review, and we'll give you the projections. We'll let you know which types of funding you qualify for and how much of funding you qualify for before we even start the funding process. That's what's great about it. So you know exactly what's available to you without you going out and shopping around and getting all these inquiries and getting declined or not sure if you're getting the highest credit limits, the best rates, the best terms, etc. Because you're basically leveraging our network of banks and lenders and credit unions that we work with, which is over 400 of them. Now, you would go to businessfundingengine.procredit.com. That's where you order your tri-merge credit report for $1. It is a monthly service. I encourage you to stay in it. It's got a lot of great benefits. Gives you your tri-merge report every single month. But that's where you'll get your tri-merge report. You download it in PDF format from that website once you log in. Once you download your report, you're going to then go to businesscreditbuilders.org/prequalification. So let me just show you. This is the link that you see on the PowerPoint right here. This is our website, business-lines-of-credit. You'll see this just gives you a little breakdown on the difference of the lines of credit. There's other funding products on here, but when you click the apply button, this will take you to the application. This is a secured site. This is the pre-qualification form. You're going to want to fill it out completely. How much credit would you like to have? Which funding program are you interested in? How soon do you need access to the money? Remember, our funding process takes 14 to 20 days, so you're not going to get the money in like 3 or 4 days or 5 days. It's about 14 to 20 days. Now, current income, this is really important because you want us to let us know if you're W-2, if self-employed, cash, etc. So we'll know if you can go stated or verifiable. And what are you going to use the money for, your name, contact number. This is where you're going to upload your tri-merge credit report right here. And you click the submit button. Once you submit your form here along with your credit report, you're going to get an email confirmation, and you're going to get contacted by me within 24 to 48 hours with the results after our underwriters have gone through your report. We'll come up with some projections and go over the funding process. You ready to move forward? Then it takes, we submit an application to you to fill out along with some documents that we're going to need. Remember, if you're going through business credit card funding, all you need is just your articles of incorporation, driver's license, and the application. That's it. You don't need anything else. Now, if you're going to go with the bank lines of credit, and let's say you have verifiable income, then there's other documents you need to submit us once you decide to move forward, which is like basically W-2 pay stubs, voided personal check, driver's license, application, etc. That's it. So with that, I'd like to thank you for listening to this presentation. If you like the video, make sure you click the like button and click the subscribe button so you can get more videos like this on all the different types of funding, how to build business credit, and how to maximize your funding ability for real estate investing. With that, make it a great day. We'll talk to you real soon.